Welcome back, traders. This is Will Smith, your Forex Bootcamp trainer. Alright, so in this video, I'm going to share with you, I decided that I was going to do like a plan to review. But before I do the plan to review, I wanted to showcase my website real quick. The link is in the description. A lot of great resources on this website, y'all. So that way, if you ever wanted to, get access to some phenomenal tools, you can go to my website. Just click on the link in the description. Hey, if you're new to the channel, go ahead and subscribe. Hit the bell button. That way you get notifications of future videos. Welcome to my bootcamp training. I'm done usually on Saturdays. I'm going to try to do more videos throughout the week. So that way, if you hit the bell button, you'll get notifications when those videos are uploaded onto my channel. Alright, so my channel is basically designed to help people who want to learn how to trade the Forex market, the crypto market, the indices, and the metals. Okay, so here's my website. Go to the website in the description and play the first video that you see here. This is my bio. It tells you a little bit more about me, where I've been, what I've did, and where I'm at presently. Alright, so definitely watch that bio video. If you like it, leave a comment in the description and give it a thumbs up. Let me know that you like that video. That's really crafted. I think it was put together really good. Alright, so basically on the site, I just wanted to showcase a couple of things here that you might want to jump on right away. First off, you're going to want to join the Academy. That's the very first thing you want to do. If you're new to trading, or if you're not profitable yet, you want to join the Academy. The first investment, before you invest a single dollar in the market, the first investment you should make is in your education, is in yourself. So I really highly recommend that you join the Academy by clicking this link right here. Okay, not only will you get access to some phenomenal trading, you're going to get access to some educators who do training live and also record their trainings, so you can always go back and rewatch those trainings. They also send out trade alerts. That way, if you wanted to take a trade, you're out and about and you're busy, you're not in front of the charts, and you feel that's a good trade to take, you could just click one button and then they execute the trade within your brokerage platform. So they have tap to trade. They also have trade alerts. The tap to trade is when they send you an alert, you tap it, it takes a trade for you. The trade alerts is to let you know, hey, this is what we're looking at in the market. We'll give you the entry, where to enter, what the stop levels should be, and what your take profit should be. So this is a great way to actually become very, active in the market by, taking these alerts and executing these alerts in your brokerage platform that you have. Now, I do recommend a couple of brokers on here, so you guys can take a look at my recommended brokers on the site. Some of them will let you trade with as low as $10, $50, so you could definitely open up a live account if you wanted to by clicking on one of those brokers on top of there. You're going to want the charting platform. That way you can follow my tutorials when I go to the charts and I tell you exactly what to look for in the market. You can actually chart your charts the same way I do, okay? Or just take a piece of what I learned and add it to what you already know already, okay? You can also hire me as your mentor if you feel you need someone that someone to hold your hand and guide you every step of the way to profitability. Reach out to me. I can definitely help you do that. Okay, I'm going to be creating a trading course soon, so you'll be able to click on this link and get access to that trading course, and you can watch it at your leisure for a small fee. The other thing I want to just showcase here is the funded challenges. Okay, so when you become knowledgeable, and you start to acquire the skill set, and you have a solid trading plan, go ahead and try to pass a challenge account where you get access to funded funds, money that the company will allow you to trade, and they'll split those funds with you 80-20 depending on which company you sign up with, but you got to prove that you are a successful trader by passing a few phases within their challenge. Now I'm going to show you, once you become really good, you don't necessarily have to take a funded challenge, and try to pass 2 phases, just goes directly to the funded challenge, where you don't have to pass any phases. And I'll show you exactly what that looks like, because that's what I'm doing. And I tell you, it's better for me to go in that direction versus to try to pass 2 phases and then try to get a real funded account. Some of the platforms that I'm with, that allow you to go directly to the funded account and just start trading right off the bat, which is really, really great. But yeah, take a look at those funded challenges there. Watch this video. They're really more motivational video. I usually listen to this at least once a day, if not once a week. But the other thing is here, right here, order your notebook. Okay, there's also recommended books that I recommend as well. But order your notebook. You can join my Telegram group. You can join my Facebook group. And you can subscribe to the YouTube channel. Okay, I have two YouTube channels on here. This one and the one above. And yeah, and let's see what else. I also take donations. And also click on this link to learn about affiliate income opportunities. That way, the money you make through affiliate commissions, you can deposit that money into your live account and just 10x that money by the skill set you learn. Now, income disclosure and no guarantee of income with disclaimers. Your income is depending on your worth ethic and the time and effort you put towards to studying the markets and so on and so forth. So can't guarantee that you'll make anything, but the only guarantee that there is, you don't make nothing if you don't try. Okay. Alright, so let me show you what the notebooks look like. Alright, and I've designed these notebooks myself, so let's go directly there. So if you want to support your boy, go to this site, and I think my link is not active. Okay, where happened? Oh, here we go. My notebooks are right here. Right here. Your Forex notebook. And there's 2 of them that I designed. So there's, go to that link. I also wrote this book here. So if you want to, if you have Kindle, you can go ahead and, everything you see Wellness Material is what I created. Okay, so definitely grab your notebooks at that link there. Okay. And, yeah, because you're going to need to take copious notes even when I start training you as well. So grab your notebooks. I got 2 Forex notebooks right there. Okay, so let's exit out of that. Alright, now let me pull up my PowerPoint that I want to share. And we're going to do a review slideshow. Okay, so we can review. So I decided I'll share with you exactly my progress, what I'm doing, what's going on, and also commentate on how I'm going to improve. Okay, so this is MetaTrader 5. You can download MetaTrader 5 on your smartphone and also on your desktop, but you need a broker to connect it to. So I connected this broker to one of my funded challenges that they gave me the login. And this is a test account. They gave me a login, username, and all that good stuff. And they're testing to see if I am actually a profitable trader. So as they're evaluating me, they'll eventually link me up with, investors, people who are interested in my skill set. They'll give me a live account, and then they'll start sharing the profits with me as I grow that account. But I have to go through a testing phase right now. So right now they're just evaluating how I'm doing. So they gave me a $100,000 account, test account, which is the balance you see down here. $100,000 account, and I grew that account to $3,291.42. Not too bad. So it goes to show you that, hey, with practice and studying the markets, studying the charts, reviewing your notes, coming back often, watching and rewatching videos, YouTube videos, tutorial videos, great things can happen. Okay, this is a skill set, right? Once you acquire this skill set, you apply the skill set to, your trading platform. Okay, but it's important that you write a trading plan first before you start taking trades. So that way you know exactly what your parameters are, what your rules are, and try not to violate those rules. Okay? Because you can actually write your own ticket with this. You don't necessarily have to wait a whole year to give yourself a raise on a JOB. You can give yourself a raise every single day that you're in the markets. Yes, there will be losses. Okay, don't get me wrong. But there's going to be wins as well. Okay, so there's a ratio. If you could win 60% of the time, you're ahead of the game. If you could win 70%, 75% of the time, you're ahead of the game. Okay, you should have more wins than losses, and then you're ahead of the game. Just keep that in mind. Okay, so let's go to the next slide. Next slide just shows you some of the wins that I've had and the actual pair that I'm trading. So gold is one I've been trading majority of the time, and as you can see, here are the profits. Okay, here you see my best day was 28th. Okay, where I made $252, $257, $261. So this is what was. I analyzed the market and I anticipate the market to have a bull run. So I stacked up my orders, okay, based on my lot size, and I was able to profit and exit the market at a certain level. That's why you see a lot of the blues. So the blues are profits, the reds are losses. Okay, so not too shabby. All right, and then I'm taking it. This is actually a funded account, like I mentioned. The company that I'm is offering this funded account is for traders. I'm gonna put a link in the description. If you want to get access to this challenge, okay, or this funded account, just click on the link and take their sign up for their funded account. So you have to invest a small amount of money in order to get access to a $3,000 account. So this is a $3,000 account that I'm growing, make profit $43.21. Now, there is a maximum drawdown with this account, meaning I cannot lose no more than $182.59. If I breach the account, they close the account. So my goal here is to grow the account to thousands of dollars, of course, and it's a 60-40 split. Okay, but in order to get a payout, you have to grow the account above $450. That's my goal, is to get my first payout with this account. Now, but I'll probably, my goal is to get this account to $5,000 every single month. To pull out $5,000 in this account in order to start living the lifestyle I've always wanted to live, right? It's all about your goals and dreams and things of that nature. So this right now is at $43.21. Okay. Now I'm going to show you the calendar. So I just started this account on the 28th of August. I took 20 trades. Okay, now that's a lot of trades. Now when I look at that, I say to myself, I need to bring that number down. Okay, because it's not necessary to take that many trades. See, I'm a scalper. I'm in and out. I don't really hold the trade for a long time. But I realized that I need to change that because that's becoming a bad habit of mine. You'll notice that you take if you take multiple trades, it's because your anxiety levels are too high. So I got to bring that down and bring it down to maybe 3 to 5 trades a day, and then I know that I'm on track. But hey, 20 trades, little microscopic trades, and I was able to grow it to $43.21. Not too shabby. Okay. Now there's no time limit on the actual account. Okay. And so for the month of August, as I go into the month of September, October, November, December, my goal for this account is to hit $5,000. Okay. And then request a withdrawal. Okay. And like I said before, the percentage is a 60-40 split. Now, I want you to think about something for a minute. That you're going to be rewarded for a skill set that you're trying to teach yourself, right? This skill set, there's no boundaries. There's no ceiling. Like I said, you can make as much or as little money as you like. If you have bills you need to pay, get yourself a funded account, practice to trade, implement what you learned, grow the account, and eliminate that bill. Okay? Because there's a lot of people out there with a lot of credit card debt. That used to be me. I don't have any more credit card debt. All my credit cards have been paid off, and I got eliminated my credit card debt. Okay? So that could be your goal. Your goal could be to, earn enough money trading the Forex market to pay your rent, your car note, your electricity. Okay, so my goal is to have one account that will pay for my household bills. I'm talking about my rent, my electric, I don't have a car note anymore. I was able to pay off my car note, which is really nice. So my rent, my electric, my cable, my cell phone bills, and purchase my groceries. That's one account. Then my second account, I'm going to get another funded account. I'm going to show you that in a minute here. That account, I can just go to the next screen. That account is a $15,000 equity account. Okay, this account, is a help. The money I make in this account will help fund my retirement. Okay. When I say retirement, like the money I make in this account I'll be reinvesting that money back into the market, buying stocks, buying mutual funds, buying ETFs, dividend reinvestment stocks. Okay. So that money is going to be buying crypto. Okay. So reinvest that money to make more money. Okay. And get with me on that, because I can share with you the actual crypto pieces, crypto or coins that I'm looking at. You might want to be interested in that as well. But this is the second account. This account is designed for retirement, investing, and reinvesting, so on and so forth. And then my third account is for quiet luxury. I love that word. Quiet luxury, meaning the money I make in that account would fund my lifestyle. Okay. Help me, fund my wardrobe. Help me get the car that I've always dreamt of. Help me to travel. So I'd be using that money for entertainment purposes, right? Go out to dinner, fancy dinners and things of that nature. And that's where I'll pull that money. So the money I make on that third account will help with my lifestyle. Okay. So as I get better doing videos, because I'm teaching myself how to do video editing and so on and so forth. So you'll be seeing me, throwing up videos on the channel, and the day in a life videos. You probably see them on YouTube, and how they actually show you their day and what goes on throughout their day, and they show you different clips of where they're at, where they're eating, where they're shopping, and things of that nature. So look out for videos like that from me as well, because I'm learning how to edit videos. So that's going to be my lifestyle video. So that's going to be pretty fun. I can't wait to share that with those stories with you guys. But yeah, this is the second account. Okay. This second account is a $15K account. I grew to $120.08. Okay. Again, this is a funded account. No challenges was required. Didn't have to pass a phase 1. I didn't have to pass a phase 2. I invested and purchased a funded account. Okay. Now, if I breach the account, again, the buffer is I can't lose no more than $907.20. Okay. If I breach the account disappears. Okay. And the amount of money I invested to purchase the funded account disappears as well. They get to keep it. But once I get to a certain amount, $450 is when I can ask for a withdrawal. Okay. So again, this account, the goal is $5,000 a month as well. So 3 accounts, each account goal for me is $5,000, $5,000, $5,000. That's $15,000 a month. Okay. And then with the profit split, do the math, 60-40 split. $15,000. I keep 60%, they keep 40%, which is kind of nice. So slowly but surely, my goal is to not rush through my trades and stack up the trades through compounding over time. So, look for A1 setups, execute your trades on those A1 setups, and profit when it hits the target. Once it hits the target, I'm out, I profit, and then it adds up and goes into the profit column. Okay, so I wanted to share this with you because, a lot of people saying, well, how I get started? Well, you got to start somewhere. You got to know the basics. There's a lot of things I wish I would have not have done in the beginning that I'm able to, correct today. All right, so there's a lot of trial and error and so on and so forth. And I'm happy that I'm able to, correct a lot of the errors that I've made in the past. And that's the great thing about trading. You get to learn a lot about yourself. Okay, it's only you against the market. The market doesn't know who you are. You're a retail trader, and the market exchanges billions of dollars every single day. Okay, all we're looking to do is just ride the wave with the institutional traders and the banks. Okay, we enter based on bull runs or we enter on bear runs. Okay, so the great thing about Forex, you make money going up, you can make money going down, depending on your strategy. Okay, and we're going to get into the strategy in a minute, but I just wanted to share with you that this is an alternate way to help you finance your life. Okay, again, it's a skill set. Once you learn the skill set, nobody can take it away from you, and you can write your own paycheck. Okay, some of you will make enough money to maybe fire your boss. Some of you will make part-time money because you love your job so much that you want some leisure money or some entertainment money, or you want to go on a trip and you want to have enough money to, stay on that trip for not a week at a time, but 2 weeks, 3 weeks, a month at a time. Okay, you'll see a lot of Forex brokers, they'll make a profit, buy a ticket, and they're off to an exotic island. Okay, living there for 3 weeks, a month at a time, not having forwarding interest whatsoever. That could be a dream of yours. Okay, or your dream is to eliminate your debt. They said if the statistic is majority of the people out there are 1 to 2 to 3 paychecks away from being financially broke. Okay, if they stop working today, they'll be broke tomorrow. Okay, but why not put a plan in place where you have 6 to 9 months of earnings through the financial markets trading, 6 to 9 months of emergency money in a fund. Okay, so that God forbid you should lose your JOB, you have enough money to continue to pay your household bills. That's 6 to 9 months. Okay, because I used to be a financial advisor. I would tell people, hey, you need an emergency fund. Okay, and then you need to put together your investment portfolio. Okay, that's why I said count number 1 is for my household bills. Count number 2 is for your retirement, your investment portfolio, things of that nature. Because you're going to need to have some money in that account to extract interest from, so that interest can help pay for other things in life. Okay, you imagine earning enough interest, and that interest pays your car note for your luxury car. That interest pays your condo fees. Okay, that interest affords you the ability to go to another trip or a cruise. Okay, that's what I'm talking about. Putting that plan together for yourself. Okay, and then the third account is to do whatever you want to do with. Okay, whether you want to give it away for charity, whether you want to, whatever you want to do with it. That's your play money, right? Your play money. Okay, you can give it to a loved one. You can fund somebody's college education in your family. Okay, or even yourself. You can go back to school and for another trade. Imagine going back to school full time and not worrying about income. See, that's the number one problem in the world right now. That if you had the money, if you won lotto today, what would you do? Would you continue to work on your JOB? Some people will, some people won't. Okay, but the goal is, if you don't put one foot in front of the other, how are you going to live the lifestyle you've always wanted? Are you going to ask your boss for a $10,000, $20,000, $30,000, $40,000, $50,000 raise? They don't have that in their coffers to give to you. They only have enough to pay you what that position is worth. okay? And they could replace you in a heartbeat. No job is guaranteed. You know, tomorrow the company could fold, and then what are you going to do? It happened to me in the past. I worked for a company. They paid me my paycheck. I went to go cash the paycheck, and they cashed the paycheck, and then I get a call from the check cashing place, and he's like, "You need to either A, return the money we gave you because we cashed your check, or sign this affidavit because the company that you worked for went out of business, and now we got to go after that company to get our money back because they got to get, you know, they cash the check, but they got to get the money from the company, right? But that company went out of business." And I'm like, "Oh man, what do I do?" Right? So what did I have to do? I had to sign an affidavit that if I had to be called in to the courthouse to testify, then I would do that because, you know, it was wrong for that company to go out of business. And if it could happen to me, it happened to thousands and thousands of people out there. Okay, no one is exempt. All right, so you got to put things in perspective. You got to plan for the worst, even though you don't expect the worst to happen. But you got to plan for the worst. Anything should happen. Your car breaks down. You need enough funds to fix it ASAP. Okay, not borrowing from Peter to pay Paul, but you have the money in place to fix your car. Your refrigerator breaks down. You have the money to go to a retail outlet and pick up a new refrigerator. Okay, your AC goes out. You need enough cash flow in your coffers, in your bank account, to help you fix or replace your air conditioning. That's what I'm talking about. And once all the stuff is in place for emergencies, you made enough money for emergency fund, you start putting in bucket number 2, retirement. You don't know how many people are in retirement struggling because they failed to plan for retirement. So it's important that you plan for the future, right? Plan for the future. I mean, set a target. What age do you want to retire? Okay? Do you want to retire at 65, 55, 45? And some of you guys are pretty young. You probably want to retire at 25. But if you set a target, okay, you know, and you work towards that target, what are the chances of you hitting the target? The chances would be 0 if you didn't have a target. But now you put a target in place, you aim for that target, and you work really hard to hit the target. See me? I eat, sleep, drink this. Okay? I study, I evaluate, I backtest, I chart, I watch other videos of other successful traders. I'm part of the academy as well. I watch those videos over and over and over and over. Because once you start doing things, it becomes repetitive training. When you start seeing it in the charts, all of a sudden you're like, okay, get ready for this. This is going up. Place your trade. If for the A1 setup, you place your trade, and boom, hit your target, you profited. Why? Because you've seen that pattern before. Why? Because you backtested on the charts and you've seen it before. See, the market repeats itself day in and day out. All you gotta do is be prepared. Okay? Be prepared to execute the trade based on what you see. Okay? Half of the time is all about patience anyway. Okay? Supply and demand. If you put a sell on the top and it goes down, you make money. If you put a buy on the bottom of the trend, okay, and it goes up, you make money. So it's all about patience. This will test your ability to think. This will test your belief in yourself. It's all about psychology. You got to build your psychology, build your belief in yourself. But it's important that you practice. All right, so back to this. All right, so this is my calendar. Okay, the calendar, to give you a calendar of how much you earn per day. I started the account on the 15th of August. Okay, and as you can see, the red days are losing days. Okay, the other days are winning days. Okay, so it's sort of 8 trades, I make 20 cents. That's what I'm saying. For myself, when I evaluate myself, I have to say to myself, you gotta take less trades. Okay, so over here is 3 trades. Okay, I'm actually, practicing what I'm preaching. preaching, right? But then 28 trades, $7.74. Still a winning day, but too many trades. Okay. And then 78, I got a little bit too happy at that day, I guess. And then look at 114 trades, negative $34. Okay. 64 trades, $41.20. So as I'm speaking to you guys on YouTube, I'm also speaking to myself, my future self, and say, hey, future self, you just need to bring down those numbers and great things can happen. Okay. So when I look back on this video, I can say to myself, you know what? This was you back then, but this is you today. So, you got this, future self. Anyway, $137, negative 37 trades, $25 was a positive day, 6 trades. All right. $243.98, 35 trades. Okay. Good day. Right? $30.96, 5 trades, and then 9 trades, $31.50. I'm up on the account. Okay, I'm up on the account. Okay, and it's a funded account. All right, which is an account where if once I grow this account to $450, I can request a payout, a 60-40 split. I'm not going to do that until it hits $5,000. Okay, so that's the goal for this account. Now the third account is this one right here. This challenge is also a funded account, and all the links will be in the description. So if you want to go to all 3 of the different companies that I'm, allowing me to take these challenges and funded challenges and so on and so forth, funded accounts, you can go to those companies, do your diligence, make sure you read everything, understand how everything works, because you can't breach the account. There are parameters, there are rules. Okay, it's important that you follow those rules, because if you don't follow those rules, you breach the account and the account goes bye-bye, and you also lose your investment of purchasing that challenge account or funded account, so on and so forth. So, alright, so this one started and it's been kind of rough. Too many trades, of course, 143 trades. My P&L is negative 73. My best day was $241. My worst day is $196, which is over here on the 25th of August. And my win rate is 60%. Okay, so I'm above 50% win rate, which is good. So 60-40, so 60% of the time I'm winning. Alright, but as you can see, these are the days. My best day was this day, the 27th, right there. 53 trades, but $241 earned on those trades. Okay, and then 22 trades over here, $59. But this is 26 trades, $196 was my worst day. And then, 29th of August was horrible. 40 trades were negative, balance of $178.40. Okay, so I'm actually down on this one because I need to get this one back up to, it's a $10,000 account. I need to bring this one back up to 10K. I'm about $300 away from 10K to bring it back to break even. So I'm working on that next week. I'll let you guys know next week when I do another weekend review. Alright, so also past tournaments, I took some tournaments with Four Trader, and I came in 39th place in this tournament. End of Summer Clash, came in 39th place. First 3, okay, the top 3 earns prizes. It could be a challenge account, or it could be a funded account, or even prizes, cash prizes as well. Okay, here I came in 24th place, and then over here I came in 372th place. Okay, so these are just fun little challenges. These are usually free to no cost to actually join a tournament. I should say, yeah, it's a tournament, not a challenge. But these are tournaments, and they're no cost. So you can sign up at any time when they have one. Again, the link will be in the description below. If you can't find the link to join one of these tournaments, reach out to me and I'll forward you the link, so that way you can actually join a free tournament to see. And then you get to pretty much test your skills, because you'll be competing with other traders. Okay, as you can see in these pictures, this picture right here, and you can see if you could become on the top 3. Okay. Alright, so I think that's the end of the slideshow here that I want to share with you. Now I'm going to jump into the charts, and we're going to go over what you should be doing in the charts, what you should be looking at, and I'll try to make some, I'll now do some analysis with you, so that way I can show you exactly how I do my analysis, and you can either copy me or take pieces, if you will, and add it to your analysis going forward. So let's go ahead and do that now. Okay, so we're going to look at gold. Gold versus USD. This is the gold market right now, and this is the chart. Typically what I do when charting, when analyzing the chart, and this is all about technical analysis. Okay, so when we do the technical analysis, we start with a higher time frame. Okay, so I normally start with the weekly just to see what's going on in the market, because I want to get my bias. My bias is basically one question. That one question is, am I in an uptrend, or am I in a downtrend, or is the market in consolidation, which is going sideways? Okay, so that's the first thing, those 3 questions I ask myself. Alright, so, and I do that with some tools. So on the left panel here, this is TradingView. Again, you can create a free account with TradingView. Go to the link in my description on the charting platform. Click on that link and create a free account. Okay, and then later on, when you start making some money, you get to become a paid member, and it'll eliminate the ads that you see on the bottom right hand side, because for me it's really annoying. So I'm a paid member, subscriber I should say, and I actually get the actual chart without the advertisement popping up every so often. Very distracting. Okay, so I take a tool on the left panel here, which is the trendline tool. I take it from the bottom and I pull it all the way up to the top. Okay. Now I typically like to make sure that the candles, okay, each one of these are called candles. Make sure they at least touch three touches on the line. But as you can see, there's only 1, 2 touches. Okay, so you can use more than one trend line, by the way. So this is one trend line. You can put another trend line right here, stretch it up. Okay, and how many touches do you have? I have 1, 2, 3, about 3 or 4 touches right there. So make sure that the wicks are touching the trend line. Right? There's a touch here, touch there, a touch here, touch there. That's 4 touches. Okay. And then you can actually put another trend line from here and stretch that all the way up. Okay, you do it like this. Make sure the wicks are touching. So this wick, this wick, this wick, and this wick. So we have at least a couple of touches here, right? Couple of touches. But what do we see as well? We could put a line on top for our resistance level. What is resistance? Well, resistance is considered the ceiling. Okay, because gold is hitting all-time highs, as you can see on the top here. Golds are hitting all-time highs. Okay, and when a market hits its all-time high, okay, you have to anticipate a retracement, meaning a pullback. Okay, because there has to be a retracement to go back and collect the orders that the market forgot to execute. And what I mean by that is you have to now anticipate a pullback, but you also have to find where the demand level is and where the fair value gap level is. Okay, so we also call it an origin. Where is the market, number one, going back to? And we find that by going down to the lower time frames. So in actuality, right here, we notice that the market's not making any more higher highs. Okay, and it's actually going not high or low, but you can put a box right here and say, hey, the market is in consolidation or going sideways. It's not making a higher high and it's not making a lower low. Okay, so right here is what we call consolidation or sideways movement. Okay, because it didn't make a higher high and it didn't make a lower low. It's just staying within this parameter, and we call this area a consolidated area. Okay, so you really don't want to trade in consolidation, trust me, because it's like a seesaw. It goes up, goes down, goes up, goes down, and it doesn't want to go higher for some reason, because the sellers are pushing it down, and it doesn't want to go higher because the buyers are pushing it as well. Okay, so sellers are at the top, buyers are at the bottom. Okay, white candles means bullish, black candles means bearish. All right, but all in all, if we look at the entire scope of the trend, we can literally say it's an uptrend. Okay, so for me, I would be looking for buys, but at the same time, if you know the market's at a peak, at an all-time high, there are going to be sellers who bought down here, who want to sell it at the top to make a profit. Okay, and then those sellers, you want to ride the wave with them and also put in a sell. Okay, so we're going to go down to the lower time frames to see what's going on. Okay, now as you can tell, it's going sideways. Okay, so the box that I put on the weekly is also on the daily. Okay, now we're going to go down to the 4 hour and see what's going on there. So each one of these are time frames. Okay, but remember, we were anticipating a pullback, right? This trend line, all these touches you see here, multiple touches of the trend line. Okay, market went up, pulled back, it touched the trend line, went up, pulled back, it touched the trend line. But as you can see, there is a pullback right here, and it didn't pass. It didn't bounce off the trend line. Okay, it went through the trend line. So there is a market structure shift happening, meaning the market broke its previous structure. Okay, which is an uptrend structure. But as you can see, it went below the trend line. Okay. Make this darker. Okay, because usually it bounced off the trend line, but over here it did not bounce off the trend line. Okay, and it did not make a higher high. Okay, so noticing that, we're looking to see if the market's going to go back down and make a lower low, because this is a low right now. So we could put support down here. Okay, this is support. Okay, that line is called the support line. Okay, so we have our ceiling, which is up here, red as well, which is our resistance line, and we have our support line down here. Okay, all right. So, and support is the floor, resistance is the ceiling. All right. Now, remember in consolidation, if the market, we're looking for a breakout trade. Okay, meaning it's got to break out of the box, come back and touch the box to continue going higher, or it'll go lower like this. But we needed to break out the box, come back and touch, and go lower like that. It's got to be a retouch. This is where your patience. This is where you have to practice being patient. Because this, we don't know when this is going to happen. Again, how long it's going to take. And we definitely don't know if the market's going to go up and then we'll come back and retouch the resistance line, which is now called support, and start trending higher. Okay, so those are the two things we're looking for the market to do. Will it go higher, or will it retrace and go lower? Okay, because remember the trend line down here as well. So that's the prediction. The prediction is, are we going higher or are we going lower? But since we know it's a upward trend, a bull trend, we will be looking for buys. Okay, meaning once the retracement, right, once it starts to pull back and bounces off the trend line that we set down here, we place buy orders. Okay, there's no reason why you can't place sell orders if it goes down. All right, so that's a big if, because we don't know. We don't know, because is that at high, it could continue its journey and go higher. But we're going to go down to a lower time frame. Okay, and we're going to look for fair value gaps now. We're going to look for fair value gaps. We're going to also set our supply and demand levels. It's important that we do that. Now we could set it on the 4 hour as well. So let's go ahead and do that right now. Let's look for demand level. I'm going to open up the chart and look for some big candles, okay? Because the big long candles going up, okay? But the little candle before the big candle is our demand levels, okay? So how many demand levels do you see in this particular picture? All right, let's draw them out. We're going to put a box. So there's got to be 3 or more consecutive candles, right? 3 or more, or one big candle. Okay, so right here, we see a huge bullish candle. Right here, we see a huge bullish candle. And right here, we see a huge bullish candle. So the candle before it, we're going to mark it as a demand zone. Okay. Alright. And it's usually the black candle, so I'm going to stretch this out to the black candle. And this one is also considered a demand zone. Okay, because it's a black candle, small candle before the big candle. And there's another one over here. Because remember, this is a huge candle. We're going to mark our demand zone right here. Like that. Okay. Now that we marked our demand zones, there's only one supply zone, which is at the top, which is right here. Okay. Now, where are the fair value gaps? Okay, so this is your quiz class. Where are the fair value gaps? Remember what I mentioned before. A fair value gap is 3 candles. 1, middle candle is a big, huge candle. 3, a bullish candle, or a white candle, I should say. And the wicks did not touch. So let me open this up and show you what I'm talking about. Okay, so over here, right here, we see this white candle, a huge white candle, and then another white candle. But right here, this wick, make it bigger, this wick and that wick did not touch. So that is called your fair value gap right there. Okay, because what the market has to do, it has to come back and fill this gap, because this is where all the orders are sitting. It did this bull run, but it didn't pick up all the orders. So those two wicks is what caused, the middle candles will cause the gap. So we must stretch this gap all the way out like this. Okay, and we could change the color to yellow, because what I want to show you is that the market eventually had to come back, fill the gap. Okay, and guess what? We forgot to put in another demand zone. Okay, which is right here, this black candle. There's another demand zone, and then there's another fair value gap right here, because see these two wicks here? Middle candle, two wicks, do not touch. You gotta mark that out as well. Okay, because what did the market do? It went up, came back, filled the gap, and created this huge bullish engulfing candle. Okay, and that's how you mark out your gaps. Okay, if you can learn that, okay, then half the battle of finding winning trades is over. Okay, so I want you to back test and look at historical data, back test, and look for those fair value gaps. Okay, look for those gaps, and you'll notice that the market's got to come back to those gaps. So if you know this for future reference, what do you think? During this chart trend right here, and we see a gap down here, okay, and I'm going to mark it out for you. Okay, I'm going to make this a little lighter. Okay, because I want to show you, you probably already see it, that there's a gap. Black candle, all the way up to this wick up here. That little tiny wick and that little wick down here did not meet, because we have a huge candle in the middle. Okay, we're going to turn this into green. Alright, so there's a gap right there. I'm going to stretch this gap out. Okay, so if we know that the market needs to come back, and which it did, it came back and filled the gap, right? Came back and filled the gap, bounce out of the gap, bounce off the gap, and continue to trend higher. Okay. Now, what do we see here? We see this candle and a huge candle here. Okay, but the top of this candle and the wick of this candle created a gap. Okay. Now, if we know this, right, and this is a shooting star. Now, if we know this, This candle, if you ever read the Bible or read the Bible's Candlestick Bible, you'll know. If you need to read that book, number one, or listen to the audio version, because this candle is a reversal candle. So if you know this is a reversal candle, and the market's closed right now, you can anticipate the market coming back into the gap at some point in time. And then when that happens, if you happen to see a bullish engulfing candle that pops out of that, okay, you might want to consider placing a buy order. Okay. Alright. And the market has no problem with coming back, getting into this gap and going higher, or coming back, touching these other gaps again. That's why you gotta pay close attention to the candles and what the market's doing. And then filling these gaps, or even bouncing off a demand zone. Okay, it could bounce off a demand zone as well. So you could bounce off a gap, and it can also bounce off a demand zone and go higher. Okay. Alright, so, but now we're going to go down to the lower time frames. Let's say the 1 hour time frame. Okay, and this is pretty much what I normally do when I'm charting my charts. When I do my technical analysis, I'm looking for supply and demand zones, support and resistance zones, and fair value gaps. Okay, because the market has to bounce off of those areas to either trend higher or trend lower. And if you're not familiar with what I'm saying, look it up. Join the academy. What is a fair value gap? Type it in Google. It'll tell you. What is a demand zone? Where is it located? Okay. So definitely write that in your notebook. Supply and demand. You're going to trade off supply and demand. But you're going to find your fair value gaps as well between supply and demand. Okay. Alright. Alright, now dropping down to the hourly time frame. Okay. We notice. What do we notice? That the gaps that we've created, the market did come back and touch and filled some of those gaps. Okay. Now, swing trading, if you want to become a swing trader, you place your trades off the higher time frames. Okay. If you want to be a scalper, you place your trades based on the lower time frames. Because I normally place my trades during a 5-minute time frame, a 1 minute, 3 minute, or 5 minute to scalp in and out. Swing traders usually trade within the weekly, the daily, and the 4 hour. And then you have your intermediate traders or your day traders. They'll trade within an hour, 30 minutes, or 15 minutes. Okay? Meaning they're not holding their trades no more than 15, 30, or even an hour. I like to get in and out. That's why you saw the little wins on my calendar. Alright, so what I'm anticipating are pullbacks right now, but I already know from the higher time frames that the market is in an uptrend. Okay, because gold is making higher highs. Okay, gold is making higher highs. Alright, and then within the hourly, since I already know where my markers are, I'm looking for the market to come in the green zones, okay, which is my fair value gap zones. But the brown zones, or this color right here, are my demand zones. Okay, so I'm going to be patient and wait for it to come down and hit any one of my zones and look for a bullish engulfing candle, and that's when I would place my buys. Because if it's in an uptrend, you want to trade with the trend. Because if you try to trade going down, which is a reversal, you don't know how far down it's going to go. Okay. Therefore, wait for it to come down to your demand zones and continue its rate going up. Okay. Your ratio would be a lot greater than a ratio going down. Okay, because if I'm waiting for the market, okay, my computer's frozen. Oh boy. If I'm waiting for the market, let's see if I can refresh the page. Unresponsive. Can you believe it? Okay, so if I'm waiting for the market, I'm waiting for the market to come down to my demand zones before I actually place a buy order. Because I want to be in, I want to trade with the trend. I don't want to, counter trend. I want to trade with the trend. Okay, when you become more skilled in this profession, then you might want to consider placing a trade on a retracement. Okay, but I'm going to be patient. I'm going to wait for the market to come down to my demand zones and get a better ratio. Because ratios are basically, if the market trends lower, right, it comes all the way down to this demand zone, and then once it make higher highs, look at this ratio versus going down for a long position. Let's say you entered here and you go right back up where the high was. You set your stop loss right below it. Is it right here? You'll be looking for like a 1:8, right? 0.46 ratio, which is good money. Okay, because if you invest at $100 and it hit the your profit, your target, you'd have made $800. Okay, so that's a really good ratio right there. But I normally shoot for 2.5 or 3.5. You do a 1 to 3. I normally shoot for 2.5. Okay, not be too greedy. Because your lot size will determine how much money you would earn in the market anyway. You always want to start off slow as a beginner. A 0.01 lot size is what you want to trade with in the beginning, and then as you become more knowledgeable, you can increase that over time. Okay, but definitely start with 0.01. So that's I do like a 1 to 2.5, or I can switch it up to a 1 to 3. And this is just a parameter for yourself. So it says, hey, if the market gets to this parameter, you would set this before all of the candles get to this area. If it ever gets to the area, there's no guarantee. But if it does get to the area, you'll at least profit it at that particular zone. Okay. You can know once the market's in profitable zone, you could now move your stop loss to break even. That way, if the market goes back the other way, you didn't make money, you didn't lose money, you broke even. Okay. And you can also do a trailing stop loss, meaning you move your stop loss every time the market gets higher and higher and higher. You just trail it, and if it does retrace and hits your stop loss, at least you made some money because you trailed your profits. Okay. If you don't understand what I just said, again, that's why you need to join the academy. Okay. All right. So that's what I'd be looking for, but I'd be waiting for the market to come down to my demand zones. I'll be placing the trade in the 5-minute, because if you place it on a lower time frame, right? And you hold on to it till it hits your target. Let's take a look at this again. As you can see, your ratio is a lot larger. So now it becomes a 1 to 16, right? So in the higher time frames, like I said, if you're a swing trader and you want to place your trades on higher time frames, your ratio is like you shoot for a 1 to 2.5, a 1 to 3.0, a 1 to 3.5. But if you place it on a lower time frame and you anticipate going back to your supply area, then your ratio is a whole lot larger on the lower time frames than it would be on a higher time frame. And again, practice. When you come down and you put it down to a 1 to 2.5 on the lower time frame, so that way you can get some wins under your belt. You can truly understand how the market works. Okay, this could be one ratio right there. A 1 to 2.5%. Okay. You don't want to do a 1 to 1 because you're not making any money, but at least a 1 to 2, you're making some good money. Okay. All right. So if you have questions, please put them in the comments area. But that's what I wanted to share with you guys today. What I just shared with you in this video, the gurus are charging $3,000 to $5,000 to learn. I just taught you this for free. But if you find value in that, you can donate to me. On my website is a link to donate, or you can hire me as your mentor, and then you and I will put together a trading plan, a strategy to help you find what I just taught you in this video. That way, you have my eyeballs, your eyeballs, and we can find these areas together when you do your back testing. And when the market hits those areas, and you just look for that one particular candle, which is a bullish engulfing candle, a candle telling you that it's going to go back up, that's when you would execute your trade. It's just that simple, but it's not easy. Okay. So with that being said, I want to thank you guys for watching the video. This was a good session. I really believe this was a good session. I believe that in the future, when I come back and rewatch this video, my future self will be like, wow, you were on point, and wow, you corrected your errors as far as too many trades. Okay, so again, my goal is to execute at least 3 to 5 trades a day, not 28, not 138, but 3 to 5 trades a day. Okay, and hopefully, right, and I'm gonna put this out there to my future self, be a swing trader and hold the trade for a week or 2, 3, a month at a time. Okay, that'll probably be my 4th account, would be my swing trading account. That way, I'm not concerned about the ups and downs in the market. I'll just put my, stop loss, my take profit, hold on to it for 2, 3 weeks, and set and forget it that way. But before then, I gotta build those funds up in order to fund the 4th account, and that way I can trade higher amounts and 10x that money as well. So lastly, I want to end with the affiliate programs that is on my website. The reason why I put that on there, because a lot of people are like, I need capital. I don't have any money to trade with. Well, if you don't have money to trade with, then you definitely need to sign up for the affiliate commissionable platform that I'm promoting online. Okay, this will give you the income you need to fund your account. And I like to call that income other people's money, because other people bought the product or service of the affiliate program that you're promoting. And you're taking that profit and putting it into your funded. You're putting it into buying a challenge account, buying a funded account. Putting it into a live account that we could trade that money. Okay, that money is not coming out of your paycheck. It came out of a commission you earned. So therefore, there's really no attachment to that money. The reason why a lot of people stop trading is when they put their real money into a live account and they lose that money, okay, without the necessary skills. And then they start doubting that becoming a trader works because they're using real money. But if you're using other people's money, OPP, other people's OPM, other people's money, there's really no emotional attachment to that money because that money's not in your account until you withdraw it, right? But when you withdraw that money and you put it in a brokerage account, and with the skill set you're about to learn from me and from the academy, you implement the skill set and you 10x that money can now fund the 3 buckets I told you about. What was the bucket number 1? Emergency fund. Bucket number 2, okay, retirement fund. Bucket number 3, leisure fund, right? Quiet luxury. So that's why I put that on there, okay? There's a lot of offers out there. I'll be talking about these offers in future videos, okay? Like Rakuten. I don't know if you guys are familiar with Rakuten. There's a link. I'll put a link in my description talking about Rakuten. How when you purchase or go shopping through Rakuten, it's connected to all kinds of retailer outlets out there. They give you cash back. By spending money, you get cash back. That cash back adds up over time, and they send you a refund check, a rebate check. That money, you could use that money to fund your live account. Use that money to buy a funded account. You can use that money to buy a challenge account. Okay. I'm looking at a check that I got from Rakuten, and it's $43.50. Okay. Because how did I get that? Okay, I got that because I purchased the laptop that I'm doing this video on right now, and the company that I purchased the laptop from is connected to Rakuten, and they offered me cash back, and I was able to earn $43.50 cash back, which means I saved money purchasing the laptop, and I got money back for purchasing the laptop. Now, what do you think I'm going to do with this money? I'm not going to go blow it and buy smoothies and stuff like that. No, I'm going to take this money, put it in, fund one of my live accounts, and trade it. Okay, and trade it. Okay, now do I recommend you do that? That's up to you. It's just a suggestion. That's what I'm doing. Everything I suggest is just, take it with a grain of salt. So it's up to you. I know this video has been pretty long, but I'm going to put the link in the description for Rakuten. I'm going to put a link for the other income opportunities that I'm promoting online as well. So you can click the link on my website, or you can go to the description area and click the link and get a free marketing, home-based business marketing website, which is connected to multiple income streams. And I'm going to teach you how to earn affiliate income. And you're going to use that income to fund your lifestyle, fund your trading habits, fund your accounts. Okay, so that's extra income that you'll earn as well on top of trading income going forward. So definitely want to share that with you as well. So so let me go ahead and wrap everything up and conclude this video. And there's one more thing I wanted to share. I'm going to share that with you right now. Hold on. Alright gang, so thank you so much for hanging in there. This is a long video, I do apologize. But at the same time, there's a lot of information I want to share with you guys this week, because I'm going to be doing this every single week on Saturday. So this is just a chart that I put up that showcases my live accounts and also my funded accounts and my challenge accounts. So as you can see here, my live accounts are with Henko Trade, Gates FX, and Hero FX. These are live accounts with real money. I funded these accounts with real money. But as you can see, my P&L on Henko, I made $7.84, which now the account grew to $307.84. With Gates FX, I funded it with $500, but I lost $432.05, which was a really, really bad trades that I made. I should have never made those trades. But I'm not discouraged because with my skill set, I can bring it back up to where I need it to be, either break even or even more. So the account has a balance of $67.95. Okay. Hero FX, and that's like I said, once you start building the skill set, you have the confidence of knowing that, hey, you're not out and out. You haven't been beaten up yet until you give up. You keep trying, right? Hero FX, I funded it with $50. Okay, you probably say $50. Yeah, remember the commissions that you make in the affiliate income, you fund your live accounts. So I've been throwing money into these accounts. That's why I was able to have a nice, nice sum here. So $50, I grew it to $12.89, so $62.89 in this account. Okay, so all in all, I threw in $850. Okay, lost $432. So now the totals of what it is, $438.64. Okay, so my goal is to bring it back to break even, but at the same time, make it higher. So I either earn $411.32 to bring it back to $850. And then the challenge accounts. Okay, these are the companies that I'm networked with, and I purchased the challenges from. Okay, this is a challenge account. This is the one that's evaluating my trades. These are funded accounts. Okay, so the challenge account's $100,000. They gave me a test account, and they're evaluating my trades. I grew that account to $3,291. Okay, which means I'm up. I'm in the green. Okay. Trade X Mastery, I have a $10,000 account there, negative $332. So I'm down on that account. In the four traders, I'm up. At a $3,000 live funded account, I made $43.32. I already showed you the calendar on that. Okay, so I'm up on this one, and it's $3,043.21. And then for challenge, this is a $15,000 account. For traders, $15,000 funded account. I grew it to $120.08. So this is the all the amount of money that I'm actually trading with. So I'm up by $3,122.29. Okay, but this is a test account. So these two are actually the accounts that I want to grow to 450 or more. That one and that one. 450 or more, and then I can ask for a withdrawal. Okay. But like I told you before, my goal is to make sure that each one of these accounts, 5,000, okay, in each one of these accounts, that's the goal for each one of these accounts. Okay. That's the goal. This is a note for myself. And once I get to that amount, I'll ask for a withdrawal. Okay. And I'll keep you guys posted on that. So, got a long ways to go. But at the same time, I'm on track, right? You gotta get in the right vehicle, number one, to get on track. And the right vehicle is learning how to trade. That's your vehicle. Once you learn how to trade, you have the skill set, you can get on the track. And then once you get on the track, you can navigate yourself to the finish line. Okay? There's going to be pit stops along the way. You're going to need to change your tires. You're going to need to put gas in your car. You're going to need to refocus. You're going to have setbacks. You're going to have losses. But that's okay. With every setback, you brush yourself off, you pick yourself up, you get new tires, you put more gas, and you keep going forward. Because at the end of the race, which is your race, not my race, it's your race. Okay, you can go as fast or slow as you want. If you can study 1 hour a day, you study 1 hour a day. If you can do 10 hours a week, you study 10 hours a week. Whatever you put down on paper, okay, you go after it. Income goals, go after it. Dreams, go after it. Okay, go after it, go after it, go after it. Because at the end of the rainbow, at the end of the race, when you cross the finish line, great things are waiting for you. But it's going to take discipline. It's going to take courage. It's going to take desire. It's going to take hope. It's going to take having a big dream. It's going to take reading positive thinking books. It's going to take listening to motivational videos. It's going to take belief in yourself. You got to be in a bubble. It's going to take your faith. Okay, a strong faith. Okay, it's going to take, for me, I'm a Christian. It's going to take, God to be in the mix, put him first, and everything else will be in alignment. It's going to take faith. Okay, sweat, tears, sleepless nights. That's what it takes. So I want to end with that and say, hey, thanks for watching the video. Come back next week for number 1, a week in review, technical analysis, I'll also address any questions that may pop up in the description area as well. So if you got questions, concerns, put it in the description area, comment area, give a thumbs up if you like the video, because this is the structure that I'm having now. I'm going to do plan, do, review, plan the future, review past events, okay, and set targets for future events. So plan, do, review. Alright, y'all, thanks for watching, and you guys have a successful week. Over and out.